Today we're going to talk about a huge mega trend that's going to play out over the next decade in which you could make a lot of money if you play it right. But this is a highly hated industry because of its past that has caused a lot of destruction and even lives lost. And that sucks, but the fact that it's so hated also makes it a great investment because no one wants to look at it. And that's why we're talking about it, right? Because when you look where other people don't, that's where you're going to pick up easy dollars. Or I should say relatively easy. Now, before we get into this highly lethal, dangerous material that we want to invest in, I got to give you some background first so you understand how important it is to our future as people. And because it's so essential, that's what's going to make it so profitable for us as investors too. And already, I don't know if you could hear it, but my puppy is crying and it's just going to happen all video. That's my life now. So sorry in advance. Now to understand what's going on and to see why this is so profitable, we got to start with Bill Gates' favorite author, Waclav Smil. There he is looking real mysterious between some leaves. Kind of sexy too, you know? Those eyes are just piercing. And I know after hearing Bill Gates' name, a lot of you will click away because he is just so hated right now for some reason. There he is with that smile. Watch out, he has a vaccine in his hand. He's gonna get you. Better run away. It's like they say, if the corona doesn't get you, Billy Gates will. Still don't understand the Bill Gates hate, but this is his favorite author for a reason. This guy has written over 30 books on a range of topics, including historical economics to geopolitical philosophy, food sustainability, energy, and more. And the key thing right here is energy. He's an energy expert. And if you already know what this dangerous material we're talking about just by mentioning energy, good job. I'll reveal it in a bit anyway. And by the way, we're using research once again from MacroOps, my global macro research firm, because that's where we track all these huge trends. So of course we're gonna dip into the research here. So the main points from Waclav are that human societies, being a natural form of a complex system, have increased their total energy flux exponentially over time and are set to continue to do so unless drastic policy measures are taken to slow consumption growth. What all that means is that we are using energy like crazy and we're growing exponentially in the way that we're using it. More and more and more and more. Considering that fact, you also got to realize that major energy transitions are an incredibly slow moving process. And it typically takes many decades before the up-and-coming energy source comprises any meaningful percentage of the energy mix. And here's a good example of every type of energy source. For coal, it took 50 years for it to get up to 40% of the global supply of energy. So what Professor Smil is saying here is that it just takes a long time for every new energy source, like crude oil, another 50 years to only provide 30% of the global supply of energy. Natural gas, 50 years for 20%. It's honestly getting worse and worse with each new energy source. And now modern renewables, where we are now, they only make up 5% of the global demand. So hint, hint, when I said this is a trend that's going to play out over the next decade, it's very true. Even I should say 30 years actually. So 3 decades according to this graph. So people are using more and more energy, right? Well, here's some more information about that. National averages show that at the beginning of the 21st century, annual consumption rates of commercial energy ranged from less than 0.5 gigajoules per capita in the poorest countries like Africa. Well, the poorest countries in Africa. Africa isn't a country. Thank you very much. And here's a Chad calling someone an N-word. That's not good. But it ranges from 0.5 gigajoules to more than 330 gigajoules per capita in the United States. So there's a wide range. And this is the United States and Canada. So less than a sixth of all humanity enjoys the benefits of a high energy civilization. And a third of it is now engaged in a frantic race to join that minority. And more than half of the world's population has yet to begin this ascent. So he's saying we're using a ton of energy over here in the West, but there's a lot of other countries and people who are trying to get to that same level because, you know, life is obviously better when you got lights. So the potential need for more energy in our world is enormous. And to extend all that energy that everyone wants, well, we don't have the supply right now. It would require 2.3 zillijoules of primary energy, or slightly more than 5 times the current global supply. So you see the problem here, right? We need energy from somewhere. And this actually fits perfectly inside of another megatrend that we've been tracking in MacroOps, which is how different nations are developing. And the way we track that is with something called the S-curve. And the reason we track the demographics and how the nation is developing, because then we can track their consumption. So if a bunch of people start developing their nation, right, and they get more money and they spend more, then what happens? That money goes to products or commodities which we can invest in. And that's huge demand for, you know, depends what the supply situation is. But we know from basic economics, if there's more demand, then the price is going to go up for whatever good all these people are chasing after. So again, with investing, we always bring it back to, I guess, guess you could say first principles, supply and demand. That's what everything comes back to in economics. So as I was saying, as global per capita income rises, people consume more. And over time, the consumption habits of developing countries trend towards those of developed ones. And this equates to a much greater energy flux. They're going to need a ton more energy. So basically, more people are going to be consuming more things, and the entire system is going to require significant more amount of energy. So again, I was saying we track this with the wealth S-curve. So when a country passes what we call the wealth S-curve tipping point, which is between 2,300 to 3,300 GDP per capita, consumption then begins to increase exponentially, following what looks like an S. That's why we call it an S-curve. So for example, in a developing country, once they start making enough money, they begin to eat a considerable more amount of protein. And raising livestock for them to eat is 7 times more grain intensive than producing for a simple plant-based diet. So demand for all agricultural goods rises, not only the animals, but the stuff to feed animals too. One of the places where this is happening is India. People are eating more and more meat. And honestly, in my opinion, the best food and the best meat is in India. Except there's no beef because cows are sacred, unless you go to a Muslim restaurant. But that's when I really thank God that I'm in America, even though I love India, because I love hamburgers, which are not made out of ham, but they're actually made out of beef, if you didn't know. And for me, it's just really a religious experience because the cow is so sacred to my culture, and I just love eating it. And my grandma looks at me in disgust whenever I do it, but I look at that burger with lust because I'm American. But maybe a better example is China. You could see in this curve right here, when they hit a certain GDP per capita range, which is again between this 2,300 and 3,300 point. And GDP per capita is just a measurement of how much people are making, I guess you could say in this example. A little more complicated than that, but it measures wealth, which is why this is the wealth S-curve, right? So when they hit this range, there's a tipping point in their consumption. So this yellow line is their GDP per capita. This red line is their consumption of commodities. Well, actually, it's not the consumption of their commodities, but the price of commodities. And because their consumption shot up, you can see this red line shot up as well too, meaning they're consuming more, commodity prices went up because all this demand for the same amount of supply, prices rise, like I was just talking about. So they crossed that tipping point in the early 2000s when the average Chinese citizen went from consuming only 1.4 barrels of oil a year to 2.2. That's a huge increase. And instead of 2 vehicles being sold per 1,000 citizens, by 2008, this figure reached nearly 9 vehicles. So consumption, exponential growth in that consumption. Total passengers carried by airlines increased from 57 per 1,000 Chinese citizens to nearly 100. Altogether, the Chinese oil demand growth quadrupled from 0.03 barrels per person per year to 0.12 barrels per person per year in less than a decade. That's 4x growth in less than a decade. You can imagine what happened to prices, right? And this happened for all commodities. So this whole tipping point S-curve thing that we're talking about, this matters because next year is likely to be the start of the tipping point where, for the first time in history, a majority of the global population will live in the middle class or rich households. According to the Brookings Institute, over the coming years, 170 million are expected to join the middle class every year. By 2022, the global middle class is expected to be consuming approximately $10 trillion more than in 2016, making for the most rapid expansion of the middle class at a global level the world has ever seen. And again, what's the point of me talking about all this, about how nations are developing and all these people are consuming more? Well, what they're consuming is energy, right? The whole energy flux, what Bill Gates' favorite author was talking about. I love vaccines. But if we got all these people consuming all this energy and it's increasing at an exponential rate, what are we going to do? Because we don't have this much energy. And I know thinking about not having enough energy is weird, right? But it's the truth. We have an energy crisis because we need commodities and we need fuel to burn to make this energy. And I'll tell you right now, the answer is not solar energy. We are not there yet. So what is going to save us then? Well, the thing that's going to save us is the same thing that everyone hates because it's so dangerous. What is that thing? It is uranium. And I'm sure you probably guessed that by now. I try to make the video exciting and hold it for the end, but whatever. Now let me explain a little bit more about uranium and, more importantly, how to play it, the best stocks to buy to capture this trend. So the prices of uranium right now are coming out of a decade-long bear market after having declined 75%. And you can see right here from the highs, this is a uranium ETF. From the highs to the lows, it looks like over 90%. That's how much it collapsed because it's just bad news. And you know why uranium gets beat up so much, right? A lot of it goes back to the disasters that we have at power plants. Did you see Chernobyl on HBO? Horrible, right? So I'm sure, as you know, there's a lot of problems that come with trying to use uranium as an energy source because of those reactors that we have to build. And here's a quick thing that people don't understand that I learned from my best friend Bill Gates. Those reactors that were failing in those different situations, like in Japan and in Chernobyl, those are very old reactors. And the technology that we have now can't even compare compared to what we were using for those reactors. And when people start focusing on uranium, like we're going to have to now, which is what I'm about to explain, the technology is going to explode and it's going to be so much better, so much safer. But going back to this, after uranium, the prices drop like crazy, like I just showed you. The number of miners in the world, they disappeared. 10 years ago, there were over 500. Now there's less than 50. The thing is that mining uranium at today's price for uranium is uneconomical for a majority of producers, which is why so many of them shut down. CapEx, which is capital expenditures for these companies to invest in the future, that's been slashed to record lows also. And this all sounds really bad, right? But here's why it's a good thing. There's a saying in economics that the cure for lower prices is even lower prices, and this is an example of that. Because the uranium price has dropped so much and all these people have shuttered, what's going to happen now is that there is not enough supply to meet the future demand that we have. As I've fully explained the demand, right? It's going to explode for energy. And now that all these things shut down because the price is so low and it kept going lower, shutting down more things, there is a very tight supply. So what does that mean? Tons of demand, very little supply, the price is going to shoot up for uranium. And that will be the cure for this industry. And now if you catch these companies in the beginning of this massive trend higher, you're going to make a lot of money. That's the whole point of this thesis. So a thing to realize is that nuclear energy is the greenest of the renewable energy sources and the only viable near-term option for supplanting fossil fuels as the primary baseload energy source. Like I said, it's not solar, it's not wind, it's not hydro, it's none of those, it's nuclear. That's the most realistic option to replace fossil fuels. And we're talking about how CapEx expenditure by these companies has dropped, right? Well, that's important when you look at the capital cycle. So here you could see that when they hit record low CapEx in this industry last time, it was the start of a decade-long bull market in uranium. And it's exactly what I was explaining before. Lower prices is the cure to low prices because record low CapEx means tight future supply, right? So they stop investing, prices are too low, supply gets so tight, price explodes. And of course, we don't just work off of fundamentals, we look at technicals in the charts too, and you can see the world uranium index is breaking out of a 5-year base right now. See that base a little better here when I zoom in, but it's having a major breakout right now. So uranium looking really good, right? The supply-demand dynamics are looking awesome. So how do you play it though? What's the best way? Well, one of the best ways that we found is investing in Centrus Energy, ticker symbol LEU. So this stock is already up 153% this year, but it's not close to being done with its run. In fact, it's only going to increase, like accelerate. And I can show you a chart right here. You can see it's just taking off. This is LEU, the Centrus Energy. But from the monthly, really, push back time frame, going all the way back to 2015, you could see there is a major double bottom. And now it's launching off from that base. So it's a great time to be looking at this stock. So LEU, or Centrus, was spun out of the US government's uranium enrichment program in the late 90s for roughly $3 billion. The company initially operated as an agent in the US government's megatons to megawatts agreement with Russia, where they downblended highly enriched uranium, HEU, from former Soviet nuclear warheads into LEU. And that's the fuel to power US nuclear reactors. This stuff is a mouthful. And last time somebody made fun of the way I pronounce nuclear, because it's not nuclear, it's nuclear. But what am I supposed to do with my Indian accent? I'm so sorry. Guess I'll eat more hamburgers. Is that what you want me to do? I'd love to. Even if it doesn't fix my accent, I'd still get into it. Now in 2014, following the Fukushima disaster, the company underwent a financial restructuring and emerged with a fresh balance sheet and new leadership. And now it continues to provide the US and international utilities with LEU supplies today. That's why its ticker symbol is LEU, because LEU stands for low enriched uranium versus high enriched uranium. Now here's the big kicker why we think LEU is going to be so profitable and the stock price is going to shoot up like crazy in this trend. Well, a couple of years ago, they entered into a $115 million cost share agreement to build the only US uranium enrichment plant licensed to produce high assay low enriched uranium. HALEU. At least that's how I'm going to pronounce it. I'm sure it's completely wrong. You could tell me in the comments. This is the fuel that's going to be used in the next generation of reactors, and it's critical to the US's long-term security by restoring the viability of the entire front end of the nuclear fuel cycle, which the April 2020 White House Nuclear Fuel Working Group noted is a strategic imperative. So the government is really behind this company, and they have the only US contract, or the only permission to have the plant that produces what we need for future reactors. And I forgot to say, even though everyone hates uranium uranium, like I said, it's the only option forward, right? So despite the negative stigma around it, there's currently 56 reactors under construction around the world, and enrichment demand is expected to increase over 40% by 2035. So it's all coming back. That's why all these breakouts are happening too that we talked about in these charts. So once again, LEU is in the middle of it, and LEU is the only licensed US producer of HALEU. And HALEU is uranium that's been enriched in U-235 up to 20%. Commercial reactors use 4 to 5% enriched uranium today. So the benefit of this super uranium, or really just the higher concentration, is that it allows for much smaller fuel cores, which means dramatically smaller reactors, greater fuel efficiency, and less refueling needs, and reduced waste. Really great all around. So the demand for this stuff, you can see right here in this graph right here, is expected to grow in the high double digits over the next 2 decades. So Centrus LEU is in a great position for this massive uranium trend. And knowing all this, it's pretty incredible that even after the stock's 150% year-to-date run, it's still trading at less than 1 times revenues, less than 7 times EBITDA, and only 2.6x net cash. So it's way undervalued. And why is it undervalued? Because this industry is so hated. So this stock could easily 10x. There's no doubt about it. But it's going to be a bumpy ride. Like, there's no doubt about it with these small cap stocks, especially in this industry. Like I said, it's so hated. It's going to be a lot of ups and downs, but that volatility is honestly worth how much you could potentially make. But to be successful in this type of investing, or really any type of investing, you really need the right temperament and emotional control. And this is something that Warren Buffett talks about extensively. And I actually made a whole video about it, which I will link to right here. Definitely watch that if you're thinking about investing in uranium, or really investing in general. It's a really important video. I'm going to put that right here, click on it, and I will see you there.